The 50-year reset that will wipe out your savings in March 2023? Something truly historic happened that no one noticed at all. For the first time since World War II ended, central banks stopped selling gold and started buying it. In just 1 year, they bought 1,136 tons of gold. China was getting gold. Russia was hoarding gold. Turkey, India, Poland, and Singapore are all buying up gold quickly. But here's the kicker, they weren't just buying gold. They were also selling U.S. bonds from the Treasury. China cut its Treasury holdings by $300 billion. Japan, which had the most foreign assets, began to sell them. In January 2026, we reached a point that hadn't been reached in 30 years. Central banks have more gold than the U.S. for the first time since the 1990s. Treasuries are being used as reserve assets. This isn't happening by chance. This isn't just a strange coincidence. This is the clear sign that the last, most important stage of a 50-year monetary reset cycle is about to begin. And if the pattern from the past continues, which it has done for more than 200 years without fail, the whole global monetary system will be completely redesigned between 2025 and 2030. The dollar won't be the world's main currency for long. Your savings won't buy as much as they can now. And the way the financial world works now, which has been the same since 1971, will change completely. In the next 25 minutes, I am going to tell you about the exact 50-year cycle that has reset the world's money systems perfectly every time since 1821. Why we currently deep in stage 4 of a 5-stage pattern that always ends in a financial collapse and a complete restructuring. Based on what has happened in the past, what the reset from 2025 to 2030 will really look like. And most importantly, how to put yourself in the best position before this reset wipes out savings accounts, pension funds, and bonds that are part of the old system. Because understanding this cycle isn't just an academic exercise, it's about staying alive financially. Every 50 years, like clockwork, the money system breaks down, the system of money changes completely. A lot of money moves from people who have paper promises to people who have real physical assets. And we have 3 to 5 years before the next big reset happens. There is no doubt about the pattern. The timeline is very clear. If you know what to look for, the warning signs are everywhere. First, I'll tell you how things have been in the past. You will understand why the next reset is both necessary and coming soon once you see it laid out. After the Napoleonic Wars, which caused a lot of trouble, Britain went back to the gold standard in 1821. For the next 100 years. The British pound was backed by gold at a set rate that never changed. This arrangement really did make the money stable. Countries either pegged their currencies directly to gold or to the pound. International trade grew and thrived. People started calling this the classical gold standard. From 1821 to 1914, it worked perfectly, but World War I completely ruined it. Governments had to print money to pay for their armies. They stopped gold convertibility right away. They printed money that was much more than the gold they had. The gold standard was basically dead and buried by 1918. Money moved around freely. Prices went up a lot. There was complete chaos. Britain tried to go back to gold at the pre-war exchange rate in 1925, exactly 104 years after the first gold standard began. This was the first time someone tried to reset. The effort was led by Chancellor Winston Churchill. The pound was pegged to gold again at £3, 17 South 10 1/2 D per ounce. Other big countries did the same thing. France, Germany, and the United States all went back to some kind of gold backing. The goal was to bring back stability and trust, but it was based on a lie. The war made too much money go around and too much debt build up. From the start, the gold-to-currency ratio was not going to work. The system was going to fail before it even started. And just 6 years later, in 1931, Britain stopped backing its currency with gold again. The Great Depression came to an end. Countries devalued their currencies against each other in a race. The 1925 reset went horribly wrong and was a huge failure. This is the 5th stage of the last cycle, which was the reset itself. It failed. The world tried again in 1944, exactly 19 years after the failed 1925 reset attempt and 123 years after the original gold standard, this time in Bretton Woods, New Hampshire. Delegates from 44 countries came together to create a brand new system of money. They couldn't just go back to backing with pure gold. There wasn't nearly enough gold to back the huge amounts of money that were made during World War II, so they came up with something new and different, the Bretton Woods system. The Bretton Woods system set the value of the US dollar to exactly $35 per ounce of gold. After that, all other currencies were linked to the dollar. This made the dollar as good as gold for trade between countries. Countries could trade their dollars for real gold at the US the Treasury. The United States made a solemn promise to keep this gold backing forever. This was the second big reset, and for a while it worked pretty well. Bretton Woods brought real stability from 1944 to 1971. The amount of international trade grew by a huge amount. The economies grew very quickly. The US dollar was the clear choice for the world's reserve currency. But the system had a flaw that couldn't be fixed, the Triffin dilemma. This is how it worked in real life. The US had to keep running trade deficits so that the world could have enough dollars for more trade. It had to keep sending dollars to other countries. But the more dollars that were in circulation outside of the US, the less gold each dollar had to back it up. By the 1960s, the US had printed a lot more dollars than it had gold to back them up. Foreign governments, especially France under President Charles de Gaulle, saw that this was impossible mathematically. They started quickly turning their dollars into real gold. The U.S. gold reserves fell from 20,000 tons in 1950 to only 8,000 tons by 1971. If gold kept flowing out at this rate, the U.S. would be empty by 1975. In real time, the system was falling apart. President Richard Nixon slammed the gold window shut on August 15, 1971, exactly 27 years after Bretton Woods was set up. He said that dollars could no longer be turned into gold at any price. This was the Nixon shock, the third big reset, and it changed everything about money in a big way. The whole world's monetary system was based on pure fiat currency for the first time in history. There is no gold backing at all. No backing of any kind by a commodity. Only a government order and the trust of the people. From 1971 until 2025, we lived in the time of pure fiat money. The dollar stayed the world's reserve currency, not because it was backed by gold, but because oil was only sold for dollars, the petrodollar system. The U.S. military's power made the dollar the only currency used around the world. And there was no other option that was big enough and liquid enough to take its place? But this system has been in place for 54 years and counting. And every other monetary system has either completely failed or had to be forcibly reset within 50 to 75 years at the most. Let's take a look at the history. The classical gold standard was in place from 1821 to 1914. The gold standard between the wars only lasted 6 years, 1925 to 1931, before it fell apart. From 1944 to 1971, Bretton Woods was in effect for 27 years. The fiat dollar system has been around for 54 years, from 1971 to 2025. We rewrite now at the very end of the historical lifespan for any monetary system. And you can see the cracks everywhere you look. Let me now show you the 5-step pattern that every monetary system goes through. Knowing exactly where we are in this cycle will tell you exactly what will happen next. Step 1. Stability. This is the honeymoon stage, when everything seems great. A new system of money is created and put into use. There is either gold or commodity backing or at least strict fiscal discipline. People trust the money. Inflation is still low and easy to handle. Trade between countries goes smoothly without any problems. Governments keep the right amount of reserves. Central banks are responsible and careful. This phase usually lasts between 10 and 20 years. Stage 1 of the fiat dollar system lasted from 1971 to 1985. The dollar stayed strong even though it lost its gold backing because the U.S. economy was the strongest in the world. The petrodollar system was set up for good in 1973-74. And in the early 1980s, Paul Volcker's Federal Reserve kept its credibility by keeping inflation down with harsh 20% interest rates. Stage 2. Prices go up. This is when governments start to use the system unfairly to get what they want right away. They print more money than the economy can handle. They have long-term structural budget deficits. They make money off of government debt. Inflation starts to go up a lot. But at first, it's still manageable between 3% and 7% a year. Not hyperinflation yet, but inflation that happens all the time and slowly but surely lowers the value of money. Prices of assets go up a lot. People buy stocks because the value of their assets keeps going up. But real wages stay the same and don't move. The gap in wealth between the rich and the poor gets bigger. This stage usually lasts between 15 and 25 years. Stage 2 for the fiat dollar system lasted from 1985 to 2008. Budget deficits that do and go away from one year to the next. Debt that keeps getting bigger. Big asset bubbles are forming. The bubble in .coms, the bubble in housing. But the system still seems stable at its core because inflation was controlled and the economy kept growing. Stage 3. Trouble. This is when all the abuse that has built up becomes too much to handle. A big shock suddenly shows how weak the system really is. It could be a big war, a disease that spreads all over the world, a crash in the financial system, or a big change in the world's politics. In a panic, the government prints a huge amount of money. The amount of debt goes up by a huge amount. Central banks have no control over the situation at all. Inflation goes up a lot more than 3% to 7%. The global financial crisis in 2008 marked the start of Stage 3 for the fiat dollar system. Through quantitative easing programs, the Federal Reserve printed $4 trillion. The national debt went from $10 trillion to $20 trillion by 2017. Then, in 2020, COVID hit like a hammer. The Federal Reserve printed another $5 trillion in a matter of days. Debt went from $28 trillion to $39 trillion. Inflation hit 9% in 2022, the highest level in 40 years. We can see the system breaking down in real time. Step 4. Intervention. This is the most desperate stage of panic. Central banks are working hard to save the failing system. They raise interest rates a lot to fight inflation that is out of control. But high rates cause the economy to go into recession right away. They lowered rates a lot to encourage growth. But that makes inflation go up even more right away. They're stuck in a situation that they can't get out of. Governments start to put strict limits on currency, capital, and prices. Countries are blaming each other for the crisis, which makes tensions between them rise quickly. Other systems start to appear outside of the mainstream. Countries begin to trade without using the dollar system at all. They aggressively build up their physical gold reserves. They make completely new ways to handle money. This is exactly where we are in 2025 to 2026. Stage 4 is the phase of intervention. In just 18 months, the Fed raised interest rates from 0% to 5.5%. This was the fastest rate hike cycle ever recorded. This stopped inflation for a while, but it quickly led to a banking crisis. In 2023, Silicon Valley Bank, Signature Bank, and First Republic all went out of business. The Fed is now stuck with no good choices. When interest rates go above 4.5%, the economy goes into a recession. Rates below 3% start inflation up again right away. There is no good way to move forward. Step 5, reset. This is the end game and everything changes. The old system either fails completely or is purposefully left behind. People talk about or force a new system into place. New exchange rates change the value of currencies. Debts can be changed or not paid at all. A lot of money moves from people who own paper assets, like bonds, cash, and fixed pensions, to people who own hard assets, like gold, silver, real estate, and businesses that make money. This stage is very painful, very chaotic, and happens very quickly. It usually only lasts for 2 to 5 years. The pattern is clear from past historical resets. It took 3 years to fully implement the 1925 reset, 1922 to 1925. The Bretton Woods Agreement of 1944 was worked out and put into effect in less than 2 years. The Nixon shock of 1971 happened over the course of one weekend. It is very likely that the next reset will happen between 2025 and 2030, and it will look like one of 3 different things. Here are the 3 possible results of a reset. One of these will happen in the next 5 years. Scenario 1, the gold reset central banks are buying gold at a faster and faster rate. A big crisis causes an emergency announcement to be made at the same time. Gold backs up some major currencies again. Not a full gold standard like in 1821, but a new mix of systems. Maybe major currencies should have 20 to 40% gold backing. To make the math work, the dollar is still a reserve currency, but so are the euro and the yuan. This is the reset that was planned and agreed upon. It's pretty much the same thing that happened in 1944 at Bretton Woods. Scenario 2, the reset of digital currency. Central banks start central bank digital currencies, CBDCs, as a whole new way to handle money. The dollar, euro, and yuan all become fully digital and programmable. We stop using physical cash altogether. Every transaction is tracked and written down. Programmable money features give governments full control over how money is spent. This makes it possible for a number of strong control systems to work. Negative interest rates mean that your digital dollars lose value if you don't spend them right away. Targeted stimulus means that the government sends digital money that can only be used for certain approved purchases. Social credit systems mean that you can only use your money if you follow the rules set by the government. This is the planned authoritarian reset scenario. China is already using the digital yuan to test this exact system. At the moment, the US and Europe are working on CBDCs. Scenario 3, the reset of the multipolar chaos. This is the reset scenario that is out of order and chaotic. Major powers can't agree on anything on the world stage. The dollar doesn't lose its reserve status because of coordination. It loses it because people don't want it. The BRICS countries only trade with each other in their own currencies or a new BRICS currency unit. The euro is the only currency used for trade in Europe. The yuan is the currency used in Asia. The world breaks up into currency blocks that are at odds with each other. Exchange rates go up and down in ways that are hard to predict. International trade drops sharply. For 5 to 10 years, we go through a long period of monetary chaos before a new stable system finally appears. This is pretty much what happened in the 1930s when the gold standard fell apart and there was no backup plan. Countries lowering the value of their currencies to compete with each other. Trade wars getting worse. And then World War II. This is why I'm sure we're in stage 4 right now and will be in stage 5 in 24 to 60 months. The proof is completely overwhelming. Evidence 1. Buying gold by the central bank. Central banks bought 1,136 tons of gold in 2023, the most since 1950. They bought more than 1,000 tons in 2024. They are buying to make money or get a return on their investment. Gold doesn't pay any interest at all. They are buying because they know for sure that the dollar system is coming to an end. And gold will be the basis of whatever system comes next. Proof 2. BRICS growth and getting rid of the dollar. In 2024, BRICS asked 6 more countries to join. At first, Saudi Arabia, the UAE, Egypt, Iran, Ethiopia, and Argentina all agreed, though Milei later backed out. The new BRICS group includes 46% of the world's population and 37% of its GDP. They're working on payment systems that don't use the dollar at all. Now, 90% of trade between Russia and China is done in rubles and yuan with no dollars. 5 years ago, this would have been completely unthinkable. Proof 3. The U.S. The debt crisis. The U.S. now owes $39 trillion in total. Interest payments alone are $1.20 trillion a year and are expected to reach $2 trillion by 2030. The budget deficit is over $2 trillion a year, and there is no plan to lower it. Foreign creditors are slowly selling off their treasury bonds. Japan's assets went from $1.3 trillion to less than $1.1 trillion. China's assets fell from $1.3 trillion to only $760 billion. The buyers who can be counted on are going away. The Fed will have to print $5 trillion or more to deal with the next big crisis. That will make people lose all faith in the dollar. Evidence 4. The petrodollar's collapse. Saudi Arabia, which is the most important part of the petrodollar system, joined BRICS and now takes yuan for oil purchases from China. The UAE will take yuan for oil. In rubles, Russia sells oil. The rule that oil must be bought with dollars is coming to an end right before our eyes. Since 1974, this has been the main way to support structural dollar demand. The dollar's structural bid is completely lost without it. Evidence 5. Losing control of money. In 2021 and 2022, the Fed completely lost control of inflation. They openly said they were wrong about transitory inflation. They raised rates so quickly and harshly that it caused a banking crisis right away. Now they are stuck in a situation that can't be solved. They can't raise rates anymore without sending the economy into a deep recession. They can't lower rates without causing inflation to rise again right away. They don't have any good tools left. This is a sure sign of stage 4. Central banks have lost control and are just reacting to what is going on. Based on past patterns and current signs, let me show you the exact timeline for the reset. 2025 to 2026. This is the current phase. Stage 4 is still going on. The Fed lowered interest rates because the economy was weak and there was political pressure. Even after rate cuts, inflation stays high at 3 to 5%. The stock market becomes much more volatile. BRICS is still working hard to build alternative payment systems. Gold keeps going up steadily, and it could reach $3,500 to $4,500 an ounce. As demand goes down, Treasury yields go up. The 10-year could go up to 5.5% or more. The dollar is getting weaker, but it hasn't completely fallen yet. This is the time of instability and doubt. Crisis trigger, 2027 to 2028. Something big breaks that makes you have to act right away. It could be a treasury auction that doesn't go well because not enough buyers show up, and the Fed has to step in and buy a lot of stuff quickly. It could be a big political event, like a war with China over Taiwan or a conflict in the Middle East that makes it hard for the world to get oil. A sovereign debt crisis in Europe or Japan could spread around the world like a disease. A big bank could go under, or the whole financial system could crash. It is impossible to know what will set it off ahead of time. But history shows that a big crisis will make the reset happen. The Fed will print $5 to $10 trillion in a matter of months when it happens. This will be the last blow to people's faith in the dollar. In just a few weeks, the price of gold will go up to $7,000 to $12,000 per ounce. The dollar will lose 30 to 50% of its value compared to other major currencies. Inflation will go back to being in the double digits, or more than 10% a year. The reset, 2028-2030. There is an urgent need for a new international monetary conference. Like Bretton Woods in 1944, delegates from all the world's major economies will work out a brand new system. One of the 3 scenarios I talked about earlier will happen. Either partial gold backing, full digitalization through CBDCs, or fragmentation into multiple poles. The dollar will never again be the only reserve currency. It could join the euro, yuan, and maybe a BRICS currency or a digital gold-backed unit as one of several reserve currencies. New exchange rates will change the value of currencies. People will either restructure their debts or not pay them. Some countries will not pay back their debts at all. A lot of wealth will move from people who own paper assets like bonds, cash, and fixed pensions to people who own hard assets like gold, silver, real estate, and businesses that make money. 2030 to 2035. The new system becomes stable. The whole world will use whatever new system comes up. The first stage of the next 50-year cycle has begun. There will be clear winners and losers. Those who made the right moves ahead of time will keep or even grow their money. Those who didn't will permanently lose 50 to 80% of their buying power. Now let me show you how this reset can ruin your wealth if you're not ready for it. You have cash if you have $100,000 in savings accounts. If the dollar loses 40% of its value in the reset, which is what happened to most currencies in previous resets, Your $100,000 will only buy what $60,000 buys today. You lost $40,000 in real buying power overnight. You own bonds any fixed income like U.S. Treasuries, corporate bonds, or municipal bonds. If interest rates go up to 8 to 10% during the crisis like they did in the 1970s, bond prices drop by 40 to 60% right away. Your bond portfolio is ruined. And if the reset means restructuring debt, bondholders might have to take haircuts, which means they only get back 50 to 70 cents on the dollar. You have a pension. Most pension funds put about 60% of their money in stocks and 40% in bonds. If stocks and bonds both drop 40% at the same time during the reset, your pension loses 40% of its value right away. And if the pension fund was already short on money, which is the case for most of them, it could go out of business completely. A lot of retirees will see their promised pensions cut by 30% to 50% or more. You have a fixed-rate loan like a mortgage. This is actually a good thing when inflation is high. If you have a $300,000 mortgage with a fixed interest rate of 3% and inflation is 15%, you're paying back the loan with dollars that are worth a lot less. Your real debt burden goes down a lot. But if you have debt with a variable rate or need to refinance during the crisis, rates could be as high as 10% to 15%. Your payments each month could go up by 3 times. You have money in a bank account in another country. If currency controls are put in place, which they were in every previous reset, you might not be able to get to your money at all. In 2013, capital controls froze bank accounts in Cyprus, in Argentina several times, and in Greece in 2015 during a major reset. Governments will make it very hard for money to move around so that people do untake their money out of the country. Here's what you really need to do to get ready for the reset. These aren't crazy guesses. These are tried and true methods that have worked in every other reset. Step 1. Get your hands on real gold and silver. No ETFs or gold on paper. Not stocks and mining. Real metal that you can touch and hold. Gold has always been the asset that resets money. Every time it resets, the value goes up a lot. FDR raised the value of gold from $20.67 to $35 per ounce in 1933, which was a 69% increase in one night. In 1971, gold was worth $35. By 1980, it was worth more than $800, which was a 22 times increase over the decade. If gold gets remonetized, it could go up from $2,700 to $10,000 or much more in the next reset. Put 10% to 30% of your liquid net worth into gold and silver. Put some in a safe at home and some in a private vault that is unconnected to the banking system. Strategy 2. Have real assets that make money: real estate and strong markets, farmland for farming, infrastructure assets, and businesses that make things and provide services that people need. These assets keep their real value through resets because they make real output. A farm makes food no matter what kind of money system is in place. A rental property makes money by renting it out. When resets happen, paper assets are completely destroyed. Real, useful assets stay alive and do well. Strategy 3. Get rid of debt with variable rates and keep debt with fixed rates. Pay off your credit cards, HELOCs, home equity lines, or adjustable rate mortgage right away. During the crisis phase, interest rates could go up to 12 to 20%. You might not be able to pay your bills at all. But if your 30-year mortgage has a fixed rate of 3 to 4%, you should definitely keep it. High inflation makes your debt load much lower in real terms. You win by a lot. Fourth strategy. Have some foreign currency exposure. Don't put all of your money in dollars. Keep some Swiss francs, Norwegian kroner, and Singapore dollars on hand. These currencies are backed by strong fiscal positions, low debt levels, and a lot of commodities. Diversifying your currencies across different regions greatly lowers your reset risk. Strategy 5. Use Bitcoin as a hedge. There is no central bank control over Bitcoin, which is the only digital asset that is truly rare. The math says that there can only be 21 million coins. No government can ever print more, no matter what. Bitcoin could work as a neutral global digital store of value during a currency reset. It's definitely unstable and dangerous. But it's the only major asset that isn't part of the normal financial system at all. As insurance, keep 1 to 5% of your net worth in Bitcoin. Strategy 6. Learn new skills and become self-sufficient. When there are big resets, supply chains stop working altogether. Inflation goes up and down in ways that are hard to predict. Things get hard to find. Keep food, water, and other necessities on hand. Learn skills that are useful in the real world, like medical, mechanical, or agricultural ones. People who rely on weak systems they do uncontrol are the ones who suffer the most when resets happen. Let me finish this with the harsh, honest truth. The 50-year monetary reset cycle is not a crazy idea that only a few people believe. It has been a well-documented pattern in history that has happened exactly the same way for more than 200 years. 1821. The classical gold standard was set up. 1914. It fell apart because of World War I. It lasted 93 years. 1925. Tried to start over. It failed horribly in only 6 years. 1944. The Bretton Woods reset was set up. It lasted for 27 years. Nixon shock in 1971. The fiat system starts. It's been 54 years and counting. The next reset will happen between 2025 and 2030. The pattern says it's time. The evidence strongly suggests that we are in stage 4 of 5. The timeline says it will take no more than 2 to 5 years. The way we've lived since 1971 is coming to an end. Not because I'm saying so. Because every money system that has ever existed has only lasted 50 to 75 years at most. It's year 54 right now. We're at the very end of what is possible. And there are signs of an imminent collapse all over the place. Central banks are buying gold at record levels. The BRICS countries are making their own payment systems. The petrodollar system is going away. The U.S. debt is getting way out of hand. The Fed is losing control of interest rates and inflation. Foreign creditors are steadily selling off their treasury holdings. Right now, every single sign that came before previous resets is bright red. The reset from 2025 to 2030 will move a lot of money from paper to real assets. People who own cash, bonds, and fixed pensions, as well as people who own gold, real estate, profitable businesses, and rare digital assets. This isn't right for regular people. This is not fair or right. But this is what always happens in every historical reset. And you might only have 24 to 60 months to get ready before it happens. There won't be any warnings before the reset. It will happen all of a sudden during a crisis. Central bankers are having an emergency meeting this weekend. A central bank announcement that was planned. And by Monday morning, the basic rules will be completely different. Your money will be worth a lot less. Your bonds will be changed. Your savings will have lost a lot of their buying power. Unless you got ready ahead of time. If this video showed you a cycle you've never seen before, and you now know that the money system you've lived in your whole life is about to change, subscribe to this channel right away. The next videos will show you exactly which assets to buy and sell, as well as the month-by-month timeline as we get closer to the reset. The 50-year cycle of resetting money isn't going to happen. Right now, it's here. We're in stage 4 right now. Stage 5 is only 2 to 5 years away. The only question is if you see it clearly before the reset happens, or if you wake up one morning and find out that central banks and governments in crisis mode have changed the way your money works. There is no denying the cycle. The timeline is very clear. And there are warning signs all over the place.